First off, the surging price of crude makes it... How about we say it makes life difficult for Fed Chief Jay Powell, particularly for tomorrow's meeting. Even as many other commodities have actually now fallen, and some fallen precipitously in recent weeks, oil keeps going higher. So when Powell gives his statement tomorrow and holds his press conference, he'll be tormented by the media with multiple questions about inflation. I've seen it. You've seen it. Powell's been adamant that this inflation is transitory. If not for oil, he could have fallen back on it. He could have pointed to all the falling grains, lumber, copper, and said, I told you so. Unfortunately, oil's too powerful and negative for the press to ignore. And I bet at some point he'll say he's monitoring it, which in this world means sell, 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 sell. Second, no matter what you say or do, the algorithms, this is the program trading, that control so much of trading, will immediately jump to the conclusion that oil demand is higher than expected, and that's inflationary. I have told you over and over that the price of crude is rising because of a reduction in supply. Part of that's a newfound discipline. Part of it's environmental concerns. Remember, when some eco-friendly insurgents snagged 3 Exxon board seats recently, it created a panic, just a panic in the oil patch. The only really sure way to cut down on carbon emissions is to cut down on drilling. Hey, maybe that's why Shell is thinking about selling its entire 260,000-acre position of prime real estate in the Permian Basin, one of the hottest oil-producing regions on Earth. Now, almost all of the oil companies are being run for cash. They're no longer taking on debt to expand. Drilling rigs are not increasing despite the rise in price, and that is highly unusual. Of course, the traders don't care about any of this stuff, so neither will the press when they heckle and hector Jay Powell tomorrow. Third, President Biden made his choice clear when he wouldn't approve the Keystone Pipeline. I think that's a signal to the industry. Unless it's already been approved, you can rule out most pipeline projects on the drawing board for the next 4 years. And even if it's been approved, it might not be safe. But that's fabulous for the existing pipeline plays. Without new pipe, their existing ones suddenly have major scarcity value. They've been crushed by cutthroat competition. Now that's gone, and this has become the strongest, among the strongest groups in the market. Put it all together, and you got a business that's a tax on the system and that doesn't do nearly as much higher as it used to. Oil is a general with no soldiers. It's a general who could force the Fed to change its tune and take a harder line, and certainly hurt the stock market. Can Powell avoid an oil trap? Look, the Federal Reserve has almost always viewed any surge in crude oil as a transitory event. And judging by how oil prices move, they're right. I felt all along that when Jay Powell said inflation was going to run hotter than expected, well, then he'd be right. And that's what's happened. And he included oil.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.